start the recording here, and we'll formally introduce things in just a second. Friends, welcome. My name's Stephen Fetter. I manage the United in Learning program for the General Counsel Office, and it is my privilege and delight once again to host our evening together and to welcome Eric and Clyde back into leadership. We haven't heard from them since the end of June, and so they've got lots to tell us. And I am just so delighted that they are willing to make time for us and join us from wherever they are here on a hot August evening, and give us a boost as we try to be faithful in our financial stewardship and keep our churches strong. So welcome to each of you. I know this is a significant commitment for you too. It's summer. And usually we all take vacation this time of year. So thank you for being with us. Thank you for your attention. We're going to use the chat for questions again. So by all means, open the chat, keep it open. My job in the process here, apart from introducing my partners in crime, is to monitor the chat, try to consolidate the questions so that we don't answer the same question 5 times. I'll do my best, and if I miss one or two, please know that we keep a copy of the chat, and Eric goes through it with a fine-tooth comb afterwards and tries to answer any of the questions that we skipped over. So, without further ado, let me turn things over to Eric and welcome him and invite you to get us going here.
Okay, let me see if I'm not muted. Good. First of all, Steve, if you could load up our presentation deck for tonight.
Yeah.
And while we're doing that, I have, I think, just entered the text for our land acknowledgement this evening. Clyde and I are broadcasting from Toronto, and we recognize that we are on the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples. And the Toronto region is now home to many diverse First Nations, Inuit, and Métis peoples. Toronto is also covered by Treaty 13, signed with the Mississaugas of the Credit, and the Williams Treaties signed with multiple Mississaugas and Chippewa bands. So just important to recognize that as we are all wrestling with some rather unprecedented circumstances through this whole COVID time. Not to forget that. So next slide, please. Again, fair number of your regular viewers, you'll know that Steve even knows that I have the creed. You have to hit enter a couple of times. But I just want to say that none of us, there's a very dedicated staff group working on, on the payroll side, and for that matter, Clyde and ourselves, a whole bunch of people, let alone each of you as treasurers and financial folks. We are really being called to be the church on this. None of us, as I've said before, signed up for the kind of stuff we're trying to manage right now. So we are not alone, and thanks be to God. Next slide, please. So we have a lot of new stuff. When we scheduled this thing a few weeks ago, we had nothing. And frankly, Monday, we had some announcements, but we had no detail. And we're going to be telling you to watch for this stuff online. As it happens, it all hit online yesterday. So today we're going to just cover a few administrative things that are of the more perhaps routine nature. Want to remind everybody about the help desk and the need to get online. I suspect I'm preaching to the choir here, but I will be issuing a message to all the regional councils and so on, saying there is no longer a place to hide. Every pastoral charge needs to be online with at least a CRA account access of some form or another. We've got some news on the 10% program, which is thankfully winding up. There's some news on all the different programs, but the huge changes and where we'll focus our time tonight is what I used to call the 75% wage subsidy, but now I'm calling the CEWS, the Canada Emergency Wage Subsidy, because there are very significant changes. It's extended into at least December, and there's even provision in the Act to potentially extend it further. So who knows where it's going to extend further, but we do have information that we think is accurate as of 3 o'clock today. And we're also going to tell you information we have that isn't accurate as of 3 o'clock today. Next slide, please. So a whole bunch of moving targets. So these are just some reminders. We weren't originally eligible for the rent program. You know, I guess almost a couple of months ago now, we told you that that had changed. We weren't eligible for the CEBA loan program, and about a month ago, or maybe 6 weeks ago, that changed. Again, both of those are limited applicability. Those aren't open to everybody, and we've covered some of the specifics around that already. We'll touch on it tonight, but those are huge change. Those are evolving changes. On the 10% program, all charities were eligible for that, and we were all, a whole bunch of us are trying to get that done through ADP and through the payroll team at the General Counsel office. But there's a new reporting requirement that just showed up on the internet yesterday, and they haven't told anyone yet. So it's I'll be telling you, and I don't know that you'll necessarily be happy, but at least we're keeping you current. And then, of course, the changes, the CEWS program, modified, extended, details posted yesterday. I want to stress that it's more important than ever now. All our ministries, not just congregations, our outreach ministries, our camps, frankly, anybody, any nonprofit entity, it doesn't have to be a charity, needs to have this CRA online account access. You might have been able to hide earlier by saying, oh, we didn't meet the threshold, we don't need to do this. But now I think virtually every single congregation in the country and outreach ministry will meet the threshold, at least some months. So now there's a financial imperative, as you know, to do this as well. I want to say that adding online donation capability through Canada Helps is again one of the things you can do. We have more than doubled the number of congregations that have made that arrangement, and you know, there's no reason not to in terms of cost and effort. You know, depending on how COVID goes, we will unfortunately rely on these online methods more and more, you know, at least for the foreseeable future. Next slide, please. So you saw these, a couple of these slides last time, but just a shout out to the, and a reminder that mission and service gifts, which are given, certainly those that are given by individuals, are you know, a gift and trust and to be transferred in a you know, a relatively timely fashion. Our information to date suggests that that isn't happening quite as normally as it used to, and to the extent that you can, we'd really appreciate you sending that money in. Again, most of it goes back out or pays for key services, and you know, it's certainly a pressure point for us. So just a reminder there. Next slide, please. Again, mission and service. We certainly appreciate in the General Counsel office, where we receive and account for this money, that everybody's managing unprecedented cash flow times. So we appreciate the fact that folks are capturing this money, and if you can, send it in. On the assessment side, next slide, please. So assessments, as many, first of all, about half the assessments due for the year have been sent in by various folks. And we're getting calls every day now saying that people would like to start up their payments because, you know, be it with the wage subsidies or other programs now flowing for many, that their situation may not be as dire as we might remember in March, when, among other things, our investments were down 30%. So just so you know what's coming, the plan is to update account statements in September. Most of that will be electronic with emails telling you to access that. The current plan, and all plans right now, when we say current, it's no different than the government. We continue to assess and reassess. The current plan is to add any owing amounts at the end of the year to the 2021 invoice. We're going to have to see where people are. But again, that assessment money, basically is part of the cash flow of the church, which right now is funding all the various programs that we're offering in terms of trying to provide relief to congregations. So if for those, a number of folks are looking to restore PAR payments, pre-authorized payments. I've listed the email for that. And again, hopefully this will be the last plea on behalf of Susan Jackson. We do hope that folks can get their annual statistics reports submitted. Ideally, you can do that online. We do aim to, we aim every year to get at least 90% of the reports in, so that we have as accurate information as possible. So that's the boring stuff. Boring, but necessary and essential. Okay, I'm seeing some comments, about the CEBA loan forms and so on. We'll cover that shortly. Next slide, please. And I think we're going over to Clyde to just talk again about how important it is to get these online, this online functionality. I think you're muted.
Clyde, you'll need to open your mic, please.
There we go.
Thank you.
Again, thank you, Eric. One of the things that we have found, and Eric has just mentioned, is that there's no reason that we shouldn't all have access to our accounts online. And to me, in the situations that we find ourselves in with the CRA and who can speak for the church and who can't, my own personal opinion is the easiest way is through represent a client. And I know we've had comments about it taking a long time, but I also had one just a week or so ago who called me back and said, thank you, because he followed the instructions and got it almost immediately. So it depends on your timing when you put in your application. The difference in them is that when you represent a client, you get registered for yourself, and then you have to register to be a representative for your church. And the advantage of that is if you're a level 3, you can add other representatives if they become registered as well. And you could have 5 or 6 people then on the account. And so there's little chance of everybody disappearing and nobody having access anymore. I think it would be a good move to do it that way. The couple of other things will be mentioned about some of these on the next slide as we cover most of our main points in the help desk. So if we could move on to the next slide. There, now this is the CRA help desk. This is not at the CRA, this is at the United Church of Canada. And I really want to express my thanks to Rose Camborne and Carla, the 2 staff members who have really taken this ball and run with it. On occasion, I get emails from them asking me to respond to something that gets a little beyond them, but basically the two of them have done a fabulous job over the last couple of months at keeping things moving, and it's really good to see that happening. The problems, we listed here about 6 or 7 of them that they've come across, and we thought we'd talk about each one just for a minute or two. Different payroll numbers and business numbers. This is not uncommon for a number of different reasons, but we're not going to deal with that right now. My own suggestion is that if you still have a business number that you use for your charity, and it's different from the a business number that's used for payroll, then make your applications for the payroll items through the payroll number. Get access to that account, and we can look at cleaning up the accounts later on, because you should have only one business number for each congregation. Directors and trustees, when you complete your T3010 form, some people were of the opinion that when you listed out your directors and trustees, you had to put in an end date. And so you put in December 31 of the year that they were elected. And that leaves us every year from December 31 until you file your next T3010 with nobody on file as representing the church. So your best bet is to leave the end dates blank. Though start date and end date is actually the length of the term that the person is there. It is not each year that they've been elected or a 3-year period. If they're running now for 38 years, the start date would be 38 years ago and the end date would still be blank. So make sure you don't put the end dates in unless the person has terminated their time on that as a trustee or a director, officer of the church. The deeming rule, this is applying to the CWSC or CEWS, the deeming rule for the first 4 parts of the program. We were able to determine that if you qualified in March, you automatically got a qualification for April, even if you didn't have your 30% loss. The same thing through May and June. Is it going to be applicable going forward? Well, at the moment it was applicable into July, but the rules have now changed, and we will go a little more into depth in that towards the end of this session. CEBA still having issues. It's the financial institutions that are saying that we don't qualify. Unfortunately, only online access for this program, and there's not a lot can be done, but the financial institutions need to understand that we do qualify. And so if you can find somebody willing to talk to you at the financial institution, that's the best I can offer you at right now. Represent a client, we've already heard about that one. I've mentioned that just on the last slide. Web access code, it's surprising how many people applied for this code and then promptly lost it. Once you lose it, you've got to go back through the process. Nobody else has your code. You've got to keep it. It's like a password. Nobody else has your code. And so if you lose it, start again. And it's just simple. Write it down somewhere. Maybe don't identify it, but write it down so that you know what it is when you're dealing with it. And the last point I'm going to make at this right now on the different programs we've got, the different subsidies, is the bookkeeping for them. I'm recommending that we have a separate account in your revenue section to track the subsidies. Some of us have got 2 accounts, one for each of the 2 payroll subsidies, and some of us are using just one account, but you've got to be able to separate these amounts because we are going to be asked to audit them. And whether it's a self-audit or whether the CRA is actually going to do an audit, I suspect we're going to be doing more self-audits. But we also need to be able to identify the total of it to report on line 4540 of your T3010 form. So it is a government grant. And the same thing will happen to the CECRA, the rent assistance program. That is a government grant. And the CEBA, when they get through, finished with that loan, you pay off 75% of it, I think it is, and 25% is considered a grant at that point. So you won't register it as a grant in 2020, but you will for 21 or 22 whenever it is paid down to the point where they can grant it to you. So these are all things that we've got to keep track of so that we're making sure that we're reporting them properly. So if we can move on to the next slide.
Before we do that,
Yes.
Clyde, I'm going to jump in because there's a couple of questions here that I think are relevant to what you've just been talking about. So let me pull them up. First of all, about CRA registration, Laurie Coleman saying, if you have a web code but you've never used it, does it still work? Is it valid?
It should be valid. My understanding is once you've got one for that business number, it is supposed to work forever, sort of thing. I have one client where they've had their 4-digit code for 9 years now that I'm aware of.
Okay.
So
thanks. A couple of questions.
Yeah.
Sorry, go ahead, Eric.
Yeah, just to say, test it and you'll find out soon enough.
Well, that's what I was thinking too. And give it a go, and who knows what you'll see, right? Okay. And there's a few questions here about CEBA. First of all, when does the application have to be made by?
Okay,
is there
Eric.
a deadline?
Yeah, I haven't seen a date. I mean, obviously the end dates, for now, I would say that if you're planning to apply here, I would do it this fall for sure. There is no end date in the material, but the assumption has been that this is for immediate urgent expenses.
Sure.
So if you're trying to sort of keep it in your back pocket, that could be a mistake.
Well, and there's a couple of people online here who are suggesting August 31 might be a deadline. So,
yeah, I could. So
Laura's saying the bank website and the CEBA FAQ page says August 31. So yeah, jump on it if you need to.
Absolutely.
Thank you.
I know that is the deadline, August 31, for applying for the CECRA at this point too.
Okay. So next question, and I'm just going to keep plowing through these because I know you got a lot to talk about too. But it's about eligibility for the CEBA. Steve is saying the TD Bank application says you have to be a sole proprietor, partnership, or Canadian-controlled private corporation. We are none of these. As anyone else sees this, and it appears the church can't qualify under those rubrics.
So what I'd like to suggest is I'll cover that very specifically with a couple of slides. You need to point them to the CEBA website itself and what it says. Every Canadian bank, TD, all the big 6, frankly, have granted CEBA loans. So what I tell people is apply online, and you may not even have to talk to anybody. The folks who start reading the small print right now are going to raise some of these objections because not everything that is makes sense. But we have very clear language in the CEBA website exclusions itself, which I'll cover a little later.
Okay, thank you. And the other one was about the CEBA attestation, but I'll take you at your word, and we'll just assume that churches have got it, and so whatever the fine print says, it may need to be revised, but we're underway. I think that's all related to those questions. So let's carry on then. Clyde, sorry to interrupt you.
Not a problem. On to the next slide, if we would.
Sorry, thought I'd done that. Try again. There we go.
There. This one is hard to read, but we've tried to put it up here. This is the attestation for the CEWS program. And there are 7 different blocks, and boxes 1, 2, and 4 may be used by multi-point pastoral charge, depending on the circumstances. It's not every multi-point pastoral charge that will use them, but they may be used. Box 4 will never, box 3 will never be used in a church situation. It's only for a specific business venture. So ignore 3, think about 1, 2, and 4. 5 is checked if you're using cash method accounting as opposed to accrual accounting. A lot of our churches do use cash, so you would be checking that box. Box 6 is used if you option for comparing current revenue. The option is using January, February average from 2020 as compared to using the same month a year prior in 2019. The way the program's written is you should be using the month in 2019, but you have the option of using January, February of 20. So you would check that if you do. And 7, I would say we should be checking it almost every time because you do not want to include any government grants in your revenue counting. They give us the option to opt out of it for charities. So let's take that. And I think it makes it look a little better for us if we've ever received a grant during this program.
Right. Clyde, and I'll just weigh in there. The only exception to that would be if you received most of our congregations get if they get government grants at all, they're one-timers for accessibility or
Right.
municipal or whatever. So if you happen to have a grant in 2019 and not 20, that's the one time where you could make that election. The government offers, or I'm sorry, the feds are offering it as an election. Generally, it won't apply to us. Most congregations don't receive government grants.
Mm-hmm. And you can click more than one. You're not limited to only one box.
Absolutely.
You can click all of them except for number 3. So depending on your situation, it's highly unlikely, but it can happen.
Sure, thanks. I should say that the slide I know is very small, but the slides have also been posted at United in Learning, so you can go there after the webinar is over, pick it up and blow it up on your own computer, and you should be able to see that a little more clearly. Sorry that it's so small on this screen.
Yeah, and although we're apologizing, it's also a bit intentional in the sense that on a print copy, we're basically putting the our advice and the form in one place so you can see exactly what we're talking about. Okay.
Just before we move ahead, I want to back up just a little bit. At the end of the last slide, I made comment about bookkeeping, and I saw a question pop up here about bookkeeping for CEBA. It should be set up as a loan, not as revenue, and you should have it in a separate account because you have to make sure that your expenses are for where urgent payment is needed. And you can't use it for certain other things. So make sure you're following what's required on that in CEBA. Okay, thank you. And I think we're now going over to Eric on the next slide.
Okay, folks, so just so you know what to expect, and so we're not being rude, we're going to go through the core programs a little bit, but quite quickly. So if we're going too fast, you can jump in with questions and we'll deal with it. But sort of for the CEBA, for the bank loan and for the rent subsidy, there's some new information, but we'll cover it fairly quickly and make sure your concerns are addressed. But we're not starting at square one on any of that. So moving to the 10% subsidy, that program's supposed to be over, right? 1,300 pastoral charges are using ADP and the national office to do it. And if you're not, we have the tools online at the COVID-19 financial webpage. But most of you are using it. You're probably a little frustrated with how fast the money's coming through. But there's all kinds of people figuring it out, is what I have to say there. Next slide. So a couple of things. All of those who are, those of you, and you may not even know, okay, but all of those who are on a monthly remittance program with their payroll account to the CRA, we expect that to have that cleaned up completely this month, and your August payroll register should show your your full rebate picture, and you'll probably see a couple of payments this month, depending on whether you were in batch A or batch B. There's a whole bunch of stuff that, frankly, I didn't even know when we started this thing. You know, the frequency of payroll, how you're structured, whether you had some people in different buckets. And so there's all kinds of odd situations, and those are relatively manual, and frankly would have happened even if you were trying to do these transactions yourself. So I appreciate that my advice to trust the system is probably wearing thin a little bit, but we do expect with the monthly folks to be fully up to date at the end of August. There will be some spill into September on quarterly accounts potentially, or situations where your tax bucket was just so small that you will take another month or so to get the full 10%. Now comes the bad news. Next slide. Well, I shouldn't say bad news. It's expected. A new reporting requirement has been added, but as best I can tell, no one's told anybody. There's a new form that we're going to be required to complete. This is part of the cleanup mess that I anticipate in Q4. It's called a PD 27. It's online. And basically, as one would expect, the CRA is going to ask us to account for the times that we rated we took amounts from the income tax bucket. So it's a pretty logical thing, from which pay period, what amount we took, what income tax, and what wage subsidy we claimed. Here's the challenge. I don't know right now how we're going to do this. We will do it. We'll figure it out. Okay. Today, I'm just telling you that there's a new reporting requirement, as we would expect. There's going to be reporting requirements for this stuff. More news coming as the CRA figures it out. But this one should be relatively straightforward if either we can get ADP to do it for you in the case where you've signed up, or if they can't for any reason, if ADP provides us with the information. Because otherwise, I personally can't tell which bucket anybody took these credits from. So we are very much going to figure this out. It's net new information, but it will be a filing requirement that by the end of February 2021, we'll all have to have dealt with. So I really can't say much more than that right now on this one. Next slide. So moving to the CEBA, and I saw a number of questions on this. I want to stress this does not apply to everybody. We're eligible if we have a payroll of greater than 20,000, if we have rental or sales revenue. I'm going to just jump ahead to the next slide. The language that opened this up and that we need to point people to. Okay, this is on the CEBA website. Okay, it is not a nonprofit organization, registered charity. Okay, well, if you stop reading there, you're not eligible. Okay, but we need to point people to the fact that there's a specific exemption here, except or unless it's carrying on the business.
Yeah, unless is the issue there, right?
Unless is the key word. Okay, and we can move forward to the next slide. Again, the funds need to be used for non-avoidable expenses. And since folks have dug up the answer, which is one I should have had because I'm remembering it now, the August 31 is what it says, not in the government material, but in the bank side material. And I think the deadline for applying is August 31st, and the deadline for decisions is like September 30th. They're giving themselves some time to do that. So you can't. Lots of you have asked, can you use this to swap out, suddenly fix the roof or pay down your debt and so on. It needs to, it lists some very specific areas, and frankly, that should be okay. By the time you cover payroll, insurance, building costs, existing interest debt, you should be fine. Most folks should qualify. Next slide. Okay, I am going to go so far as to say, like some of you are on this on the chat box are quoting some language from what's called the non-deferrable expense stream, which is some of the enhancements they added in June. I'm saying don't even bother. I can't imagine a congregation being successful in that stream. I think there's one trying, and I'll eat my words if I have to, but you should be applying in the payroll stream if you qualify, and you should be applying online. And I can tell you that every bank has approved loans for congregations that have rental income or can demonstrate that they meet the criteria. The criteria being the rental income or sale of goods and services reported on line 4640. We did a lot of lobbying in background to get those, what seemed like relatively minor wording changes. Someone was asking if you don't qualify for the loan, but got one. Well, I think the right answer for a church is to give it back. If you, I'm just trying to think of any other questions that showed up there, Stephen, on the CEBA. I am aware that some congregations have returned their loan because they weren't eligible.
Sure. There's a couple of people who are concerned that the fine print in the loan agreement they have to sign seems to exclude them. And so they think they're not eligible because of the actual wording in the loan agreement.
Right. Well, the thing is, you don't sign that when you're applying. So what I'm saying is you can and should be pointing out the wording changes that I flagged on that earlier slide and pointing them specifically to the government rules. I'm just going to switch gears here a second. I see a comment from Ray Marshall, who has these 2 payroll accounts. And again, that's going to be an unusual situation because there are checks and balances now where before the finance folks just pumped out the loan. They didn't look at anything. Now I think they at least have a cross check over to the CRA to look to see if there's a payroll account of at least $20,000. But the main thing I would say to folks is we have something that we pursued through politicians and lobbying were these changes to say that in those relatively, well, I won't say rare, but it doesn't apply to every church, but to the extent that this program is targeted at folks who have property related revenue and or sale of goods and services, we are included.
Sorry, I may have bumped the slide when I was trying to find an answer to another question. Okay, so somebody's asking about if you're in the payroll stream, but you're also getting the wage subsidy program, how do those two interact?
The wage subsidy is not income for consideration of it. Well, first of all, the wage subsidy does not affect future wage subsidy eligibility calculations. And the loan is a loan, it's not revenue anyway.
Okay, thank you.
There was also one question, I think from, well, I'm not going to guess, it might have been Alex, saying that you needed to account for this grant in advance. I don't see how that's possible because you can only qualify for the grant if you're in a position to pay it off in 2021 or 2022. So I think that advice that was mentioned in the chat box just has to be a misunderstanding of some kind.
So Jim Patterson is asking the payment of denominational assessments, is that a non-deferrable expense that would qualify?
I would say it is. It's in the manual as the second tier priority. To be honest, I'm not sure it's something the CRA contemplated. But yeah, it is. I'm going to say yes because of my biased position.
I love it. We've got you on the recording saying that with the caveat.
Yep, come and get me.
I think those are the questions I've seen about the CEBA, so I'll carry on, folks.
Okay. So again, this business of this other stream, if there's one or, I have encouraged one or two people to say, if you really think you've got a case of list, like it's way more complex, you have to give them a bunch of documents and show them the expense. And at the same time, you're a really small congregation because you don't even have the 20,000 in payroll. I personally think it's a waste of time, but if one or two of you are trying it, please keep me posted. Okay, next slide, please. Okay, I'm going to go faster here. The main news on the, I've included some of the slides with the information, and I've got about 5 or 6 slides here. But the bottom line is that the program has been extended twice now. It was announced the end of June that it was extended through July. It was announced at the end of July that it's extended through August. There could be further extensions. Frankly, this program has been utilized less than the government thought. The main qualifying thing, though, for you folks, I think this is mainly of interest to folks who've already gone down this path and are getting the money, and I'm aware there are several, is that for July and August, you qualify if you met the test if you met the April, May, and June test. So you basically just tick a box and says, here I am again. You have to apply, but it's almost like the deeming rule where it's relatively automatic. If you haven't gone down this path and choose to, the next few slides cover some of that material, but we're not going to devote any time to it other than any questions you might have. Next slide, please. So landlord eligibility, there needs to be a rental or lease agreement. You need to have reported rental income. Next slide. Tenant needs to have a 70% reduction, and of course, if they've closed entirely, like a daycare or a school or something, they probably meet that. And there's a bunch of other little qualification rules. Next slide, please. So the documents. So the documents you actually have to submit are a tenant attestation around revenue, an owner attestation that, and the deal where the owner, us, is committing to passing on that saving. Okay, obviously you could be asked for the lease or rental agreements and stuff, but the main point on this is we did a fair bit of how-to in our May 27th webinar. If you haven't done this and are still choosing to do it, which would be a surprise to me, you do need to go to the CMHC website and register and get a number and get that all fired up. Next slide, please.
Eric, I thought I read in the paper somewhere that they were easing the amounts and the restrictions around the 70% income loss in the final term to kind of allow businesses to restart slowly. Did I mishear that in the press?
There's been various things said around how this program might evolve, but right now, what's announced and what is formal, there's a lot of, again, this program is underutilized, and they're not getting the, whether it's economic impact or political credit. So I think we'll see some more traction here around what happens to the poor landlord or person paying the rent if this program goes cold turkey in September. So I do think there will be transition provisions, but there isn't anything that we plan for yet. Right now, what we're saying is you can claim for July and August.
Yeah, and applications close on this on August 31st.
Mm-hmm. Yeah, and again, it could all change tomorrow.
Yes.
Because it has every other month. Next slide, please.
Well, Carrie, before we go, Carrie says, I assume the CECRa doesn't apply if a church is closed. Sure it does.
Yep.
Sure it does.
Absolutely.
We got it in my church.
Yeah, no, it's all about what happened to the tenant.
Yes.
And what your deal with the tenant is.
Yeah, and our tenant was a daycare, and they had no income for 4 months. So yeah, we got it, no problem. So
next slide, I think we might still have a slide or two that talks about.
Oh, sorry, thank you.
Yeah, no. So this is how it works. The tenant has to get at least a 75% rent break. And again, I'm not going to dive into this in detail for now, other than if you are still considering applying on the original basis, you could potentially qualify for 5 months of credit here. And again, you're passing a significant amount on to that to your tenants. Next slide. And I'm sorry if I'm rushing here. The main topic is what we're coming up to. Okay, United Church Emergency Loan. Again, I'm just covering it in terms of the suite of options and so on. We a fair number of congregations that aren't eligible for some of the other things have gone this route. A reminder that there's a special emergency grant from the United Church Foundation that we're using to provide the cash that's going out to congregations for this. And I'm continuing to work with our banks to have extra credit facility to be positioned to respond as these programs, the government programs, potentially wind up. Next slide, please. I think it's good. Yeah, so again, some details. By the way, when we don't have an end date on this, okay? And so frankly, I anticipate that the interest-free period and the forgivable amount and when the interest starts, I think all of those things are going to have a bit of a sliding scale, because we're going to have to reevaluate where everybody's at in 3 months' time. Okay, my short way of saying that is dates may change to align with everything else that's changing.
So Eric, sorry, going back to the rent subsidy, couple of questions here. First of all, we've got one church where their tenant is a school that runs September to June. So they would normally pay no rent in July and August. Does that mean that they can't get the rent subsidy for July and August? I guess that makes sense, yes?
Well, Clyde certainly nodded.
Clyde is nodding.
Yeah, there's a limit here. It needs, I would say, the first place to look on any of this stuff is a sniff test. If you're doing cash basis accounting, we've had questions around folks who might record all their rent at once. Should they smooth it out to make their numbers look better or worse? Everything should pass a sniff test here. Like if you're needing to change your process to qualify, I would suggest that's risky. Clyde, any comment on that?
You need to unmute Clyde, please.
Yep, there we go. I've had one where that I'm aware of one that was rejected because they didn't have rent in a period and somebody wouldn't acknowledge it. Otherwise, they couldn't take and spread it over the 12 months late. So,
yeah.
Okay.
Okay.
Another person sent me a private comment saying, is this program going to be extended again? We're a church. What if the daycare can't, pay the rent in September? We don't want to kick them out.
No idea.
Yep. Short answer is, yep. Don't know. But as you can imagine, it's not, the government's wrestling with these kinds of issues as well. And, meanwhile, we need daycares for our kids. So stay tuned. I would not be surprised at all to see this particular program extended. And as Steve mentioned earlier, at least a phase out element added.
That's just a reason to have another webinar in September.
Oh, the odds of this not being the last webinar are high. Okay, next slide. The church loan stuff, at least we control that. And again, just this is more for, so, if one person's just checking one webinar, we have sort of a bit of a checklist and some bullet points. The wage rent or rental subsidy, that's a local decision on whether to participate. I have people debating on whether you should apply or should you spend your unrestricted reserves first. My position is that the government is trying to help people get through to the new normal without depleting savings. That we're not, as individuals, we're hopefully not burning through our RSPs to pay current expenses, right? It's the same kind of logic for an entity. So that's my take. the rental thing, the CECRA is it's a forgivable loan, so it's for my purposes it's a grant. So I would, and no regions pushed back on that, so I'm assuming they agree. Loan applications, we are looking at expedited region approvals. I'm seeing some of those happen within within 24 hours by email. So I don't think any of that's a problem. That's internal stuff, and we're all trying to respond and be more flexible. And there's Judy mentioning that Prairie to Pine is automatic. It's just basically a notification that you applied. Next slide, please.
Yeah, the next slide says question. So let me jump in here. Just to kind of follow up on the rent subsidy thing, Karen Chow says she checked this out today. The rent subsidy requires a 70% loss in revenue in April to June period. Doesn't matter what happens, only July or later. She says she called about the program today and it was a pretty quick and simple answer.
That's correct. Yeah, no, I thought I said that, but just in case, you literally get to just tick a box and apply for July and August with the extension announcements.
Mm-hmm. And P2P is?
Prairie to Pine.
That's just one of our regions?
It is.
Okay. Thank you. Okay. On questions about CEBA and the rent subsidy, I'm not seeing a lot. Don Kindup says, not sure we need the CEBA. Should we apply for it regardless?
Again, that's gets into some local, what I say, values considerations. If you don't, the purpose of it, and I'm going to say the right thing to Don would be probably not. I know some folks will say, hold on, there's a grant. Faith communities aren't adequately recognized, and we should go for everything we can get. Others, the purpose of the program is to help you meet non-deferrable expenses. So there's an argument for not applying as well. But I'm leaving that. I don't think even a regional council will have a view on that. You could consult your region, but overall, these are emergency programs. Depending on your political stripe, some will say that everybody should avail themselves to the maximum. Others will argue that it'd be prudent not to inflate our deficit, our federal deficit, unnecessarily. Did I dodge that well enough?
Yeah, we'll let you run for prime minister next. Yep. So if tenants are not able to use a closed church, does the rent subsidy apply?
Yes, definitely.
Yeah, they've lost the rental income. The whole point is that they have they've lost all their revenue, and this is a way to reach them. They might also be eligible for the payroll programs and all that kind of stuff, but specifically, this one, it's a little more politically directed, in my opinion, but it's for small business and charities and others who qualify.
This comes out in the fact that you've got a lease, and legally they're bound to be paying that rent every month on a lease. And the only time you might get out of that is if you have a particular clause in the lease, which is not all that common in our church leases, called a force majeure. Force majeure, sorry.
That's right.
Yeah. And that would get a tenant out of paying the rent if the building is closed. But most of us don't have that. So yes, this definitely applies even if the church building's closed and they can't use it.
Mm-hmm.
Okay.
So I think you answered this question a minute ago, but I'll ask it again. If the wage subsidy program reduces the payroll expense, then does that reduce the 40,000 CEBA eligibility requirement? Is the relationship there?
Wage program does not reduce payroll.
Okay.
Wage subsidy is a grant based on the wage payroll.
There you go. If the regional council rejects a church application for the United Church Emergency Loan, is there an appeal process?
Not one we've created yet. I would suggest having that conversation with the region from a distance. the whole idea of a regional review is folks more knowledgeable of specific situations. So I would suggest the appeal process right now is to say, have a discussion on why that was rejected.
Sure. Thank you. We've lost at least $7,500 in wedding income. Can we claim that?
No.
No, because there's no lease.
That's right.
Yep. We waived the rental payments from our tenants, says Carrie Hill. Can we apply?
Yes.
Only if there's a lease.
If there's a lease on it, and because that's what we did. We waived it. Our tenant didn't even have to pay the 25%, but we at least get 50% of that rent.
Yeah, but we couldn't apply for the dance class that comes in twice a week.
That's
We
right.
could only apply for the daycare because we had a lease with them.
Yeah.
Right.
Yeah, there needs to be, folks might, those of you who have been on before, Kendra took us through this, Kendra Fry from Trinity St. Paul's, where she has literally hundreds of small rental arrangements that aren't eligible for this. And then sort of lease, larger type lease agreements and so on. This does not cover piano lessons, Tai Chi, or whatever else might be going on.
Yeah, and James points out previously it was mentioned that the renter needed to have exclusive use of the space. Yes, and a formal lease really is the big issue. So does the unpaid rent go into accounts receivable, or do we just not report it as income?
It is definitely a government grant.
No. If we've got a tenant who didn't pay rent and is never going to, we're asking the bookkeeper here, would you list that as accounts receivable or just not list it as income?
No, I would not list it.
Yeah.
Yeah, I mean, accounts receivable needs to have some reasonable hope of getting it. If you're not even trying it, it's just a variance.
Yeah.
Right. So are we going to set, as the general counsel office, going to set policies with respect to paying arrears on assessments, or how does that happen?
I think the short answer is yes. Frankly, this would have been on our to-do list as part of completing the transition to the new funding model. So yes, there will be some policies. We've kind of refocused a fair bit of effort on this COVID thing that's been going on. So yeah, the assumption, the overall assumption for assessment is we're trying to move to a consistent approach across the country, with relatively limited exceptions, and the way that we would probably look to tackle that, shortfalls, might just even be against, the ultimate closure or whatever else might happen. But yes, there will be more documentation coming on this.
Thanks. Last question, and then I think we should move on. And this is probably one for Clyde. Can you talk or wax eloquent about the difference between a rental agreement and a lease? We've got A. Martin here saying we rent to small groups, we sign an agreement to rent the space. Do they count?
Well, they don't.
Kendra would have said no because it wasn't exclusive use space. That's
right. That's right. So it has to be a little more formal than just a one pager.
Okay, good. Thank you. Let's carry on, folks, and I'll continue to try to consolidate the questions as they come in. So keep them coming, even if the guys are talking.
Okay.
Who's up next?
Yep. Okay, folks. So I'm already noticing I didn't fix that. Well, this is true. June 24th, it's still true. There's this concept of the 10% where you take it from a bucket, and now we have to even fill in a form and report how we do it. And most of you are having ADP do it. The 75%, and I can no longer call it that, you apply for each month. And it has these rules. It has a deeming rule where if you qualify 1 month. So a significant distinction between the two programs, and I'm starting with that. Next slide, please. So you'll see the lines drawn out in the heading because it just keeps moving. So June 24th, when we last spoke, we knew that there was one period added, period 4. And then July 17th, they told us some more stuff was coming. And then yesterday, they announced how it's all going to work. It's hugely different. And the reason I want all of you to apply for your CRA account access is in my opinion, every single congregation in the country is going to be eligible at least some month over the next while under the new rules. The dates are extended to November 21st at least, and as I mentioned, rolling into the new year, there's provision so they can do that. Any reduction in revenue on a year-over-year basis is going to be eligible for something. Okay, it's going to be less. There's a phase out happening with this. The spreadsheet is way more complicated. Not so much to fill out, but basically they're putting all the revenue. They want your revenue numbers in there. They want your they've really put a lot of work into it. There's something called a safe harbor provision for the next 2 periods, where if under the old system you got you qualified, for the 30% rule, you were going to get at least that amount of credit, so that the new rules didn't hurt you. That they're calling that the safe harbor provision. Period 5 application opens next week, I guess. The calculators and documentation was posted yesterday. Just a warning, both spreadsheets have errors, and I've talked to the government. They know they'll probably be fixed tomorrow, but they're also being very careful now to list versions. So even the spreadsheet that you used 3 months ago is now updated. I'm not sure whether you should bother to go back and look, but they continue to update it, and there's a spreadsheet now for periods 1 to 4, and there's a separate tool and spreadsheet for periods 5 to 9. What I want to stress, the link that I'm providing here is something, it's funny, the CRA rep that I spoke with today gave me this link, and it's mainly the sort of the news announcements. It's buried 5 or 6 clicks down. You'll never find it if you went to look for it. She had to talk me through it, but it offers the most intelligible explanation of the overall program. So I don't know if somebody wants to paste that into the chat box or whatever, but it explains how it all works. And even the CRA official pages on how and what to do and all that kind of stuff this offers a more pictorial explanation, which I at least find easier to understand. Next slide, please. So here we go. We're going to dive into it. We aren't going to go into the spreadsheet, but the overall idea here is that there's a potential top up for people who've had huge revenue hits. A huge revenue hit means a decline of over 50%. Frankly, I don't think that affects almost any of our congregations. Okay. However, a lot of our congregations have had 10 to 20 to 25 to 29% decreases and weren't eligible for anything. Under the new program, you are. You're going to be eligible for something. The spreadsheet helps you calculate it. It depends on your revenue drop. And for each period, as you can see here in this graph, you could be getting as much as 85% back for the first couple of periods, depending what your situation, and that would be a dire situation. I don't think it's almost anybody. But those of you who haven't qualified to date, but have revenue month over month revenue shortfalls, now do qualify. I think every single person out there is going to qualify some month or another. Okay, so that's a key. This is just intended to be an overall picture, and what the lines show is periods 5 and 6. You could very well be looking at the same kind of subsidy that you've been getting, and then it starts to phase out. And by December, right now, it's scheduled to go to 0. It's going to go to 0 sometime. I don't know if it's going to be December or not, but that's what the current legislation says. It did get royal assent. This is all official. Next slide. So, and again, I'm not going to beat these slides to death. These are the charts from that web link I gave you, okay? The new periods there's period 5, 6, 7, 8, 9. Period 9 ends in November for the moment. overall, you're going to qualify if either your prior, like, let's just do period 5 for now, because that's the one you're going to apply for next. Period 5, you're going to compare your July over July income, or you're allowed under the deeming rule to use your June over June income, your revenue calculation. And then, of course, there's the whole business about comparing to the beginning of the year. So those of you who have done this, at least understand the concepts. And if you're new to this, it's going to take a little while, but even playing with the spreadsheet a little bit will get you there. The spreadsheet, I appreciate, I'm in the middle. I'm not a spreadsheet geek, but, and I like spreadsheets, but even just typing in a few numbers, you can get a feel for what the variables are. At first, I would recommend just making it up and playing with the spreadsheet. So these are the periods, okay? And basically, there's going to be, it's the same concept around qualifying potentially for a couple of months in a row. Next slide. So revenue drops, and this looks busy, but the basic notion is if you have a 50% revenue drop in the coming period, you can get even more than you were getting before. Okay, like more than the 75%, you can get up to 85%. If your revenue drop is less than the 30%, there's this multiplier effect. This is the gray area. It's 1.2 times the revenue drop. And so, you can sit there and go, oh my God, what does all that mean? The spreadsheet will do it all for you. You basically put in your revenue numbers for each applicable period, and you put in your payroll amounts in the weekly field, the way Clyde taught us to do, and the spreadsheet does all the work. Okay, so it isn't as bad as or as busy as that looks. But my point being, you might still decide that when you do the arithmetic, that getting 1.2 times, say, 10, if you have a 10% revenue drop, 1.2 times 10 is 12%, with plus the 25. You might decide that it isn't worth the hassle. You might still decide that, but some month or another you're going to qualify. Because at some month or another, your revenue is going to be less this year than it was last year. Okay, next slide, please. And I'm glad to hear Bill Corrigan is saying that he played with the sheet this morning and it's fairly easy to use. I want to now, the irony of having said all that is both sheets are wrong right now. They've got errors, so don't do it yet. Hopefully, it'll be fixed tomorrow. Okay, so then we got the top-up business. So there's a top-up. Our 3-month average revenue drop, most of us aren't going to be in any of these numbers. As far as I'm concerned, almost all of you can ignore the top up, but the calculation is there for you. You just put in your numbers and the spreadsheet will do it behind the scenes. You don't have to care. Next slide, please. Okay, so now you start seeing, for each of these, you're seeing the phase out. Okay, so I'm hoping you can read the slide. Failing that, it's in the link, and failing that, it'll be in the slide copies. But basically, you're seeing the maximum weekly benefit decrease with each period. They're phasing it down in terms of how much. It's no longer going to be, quote unquote, 75% or nothing. And the revenue drop with regard to the reference period, again, they're building in these calculations. Okay, but the key one being that in periods 5 and 6, any revenue drop qualifies you for something. Okay, and if you have a 30% revenue drop, they even make sure that you get what you would have gotten under the old system. This is the safe harbor provision. I know how complicated this sounds, but the key thing here is if you input the data, your wages and your revenue numbers into this spreadsheet, it does it for you. and it summarizes what you need. It's way better than what some of you were wrestling with 3 months ago. It's also version 6 of the what the government gave us to work with 3 or 4 months ago. So here I'm describing a phase out and the multiplier effect in each period. Again, for period 5, the first thing is if your revenue went down, even you qualify for something. Next slide. Okay, phase out the second piece. Okay, so the maximum weekly number, you see that going down per employee. You might recall, I think the number was 847 at one point. They're starting to wind it down. And as a taxpayer, we think, we're probably, feel some relief towards that. As a small enterprise governors, which we are in our church context, obviously we're wondering about, how those future months look and even what our situation will be in those months. Okay, next slide, please. So the deeming rule, okay, recall that the deeming rule is this business around if you met the test in March, back in the old days, you automatically qualified in April, and you only needed to have a revenue test again in May. Now what they're saying is you can use either of the preceding 2 months. So if you're doing an August claim, you'll look at August, what happened in August revenue comparison, or July, and whichever one is better for you, you get to pick. The spreadsheet will do that for you, especially when it's corrected. I'm sorry, I have to keep harping on that. It's my one little bit of pathetic humor. Next slide, please. So a reminder for some, I suspect most of you know this, you claim at the payroll account level at the RP number. So you need to do these spreadsheets and things for each RP number that you have, including the ones with the suffixes, like the 001 and 002 and so on, if you have that. If you have people who aren't on ADP, you might have to do some manual adjustments where you're, if at least you're using the same RP number. Okay, next slide, please. So just a quick summary. There's separate spreadsheets for periods 1 to 4. It's version 6, for that first one. It's version 1, and it's going to be version 2 tomorrow for periods 5 to 9. And hopefully it'll be ready for you for the weekend for any of you who are rushing to apply, because the application process opens up for period 5 on Monday. But again, they're finally building in, they're catching up a little bit. So a lot of this is more automated now. You get a drop-down menu where you're picking which period, and you can't actually move out of the period. You have to fill in the information, and it checks all that stuff for you in a way that it didn't before. They're offering 2 ways to do the calculators. Okay, one is online and one is downloading a spreadsheet. You should do the online calculator especially if you're going to do all the work at once and are comfortable that you'll get it all right and perfect. And I personally am saying, don't do that. I tried it today. It works, but it's, I think it will make sense to have a record where you can check your work and change it, because you literally don't get to save it. You have to basically enter it and submit it. So there's an online version and there's a downloadable spreadsheet. Eric says download the spreadsheet every time. Claim period, all of that exists. Clyde has taken us through these in detail. Weekly pay figures, just as a reminder, even the definition of wages has evolved over time. Now the language is much clearer. It basically says anything that attracts income tax, so taxable benefits. Some people get some people are just paid a Con Ed allowance as opposed to reclaiming, claiming Con Ed expenses. One is taxable, one isn't. And at this point, I'm not sure I'd even go back. If you have used a different wage definition earlier on, there is provision to make adjustments in your filings, but I'm not sure I'd even go back. Clyde, any comment on that? And muted, of course.
Yeah, I would agree with you, Eric. I don't see one of the allowances that are taxable. I don't see them making a big enough difference to make it worth all the hassle.
Okay, thank you. Next slide, please. So just a reminder, Clyde's taking us through this again, but this is, can't say this enough. We have help desk support for you on this. These are the ways to get online if you're not already. The CRA has pulled out all kinds of stops. They've got all kinds of people trying to answer the phone. So I got through in less than 2 minutes today, midday. I appreciate other people have got horror stories, and it's just like anything else. There's a bit of luck involved, but they're also opening. They're also open extended local hours and stuff. So, give it a try.
Just one quick comment before we move on. I saw in the chat box the use of the web access code. Somebody put in that they haven't used theirs for years. They just tried it and it worked.
I love it when a story comes true. Hey, when a plan comes together, right?
Right
okay.
on.
Yeah. Now, next slide, please. Okay, so that is the program. We're going to have time for some questions and so on. But we could even try to do a session on working through their spreadsheet, but it is truly that intuitive. So, my message is really play with it and let's see if there are any challenges arising where, you can try the CRA help desk. That's not its primary purpose, but we'll understand that a little better in a few days too. We're all seeing this stuff for the first time. So cybersecurity, this is a slide from last time. There's all kinds of weird stuff happening in this regard. I've seen fake general counsel emails asking regions or congregations to send money in or something. Your instincts are always going to be pretty good here. We don't, our emails, we try to make sure they're official, sent through, properly vetted services. And we aren't ever going to call you up and say, send the money today, unless you're talking to Eric Matheson or you're somebody if Judy Hare calls you and says that, you could rely on it if I call, but generally speaking, just the normal caution is a good idea.
Fortunately, we all know what you look like now.
Indeed. And what I wear.
Okay. The louder shirt, the more likely it is to be Eric.
There we are. Next slide, please. So insurance, again, this is just for completeness. I've taken a few calls today where folks' September statement showed up. Insurance premiums, we hope that I've written a piece that we'll have posted on the web probably later on this week explaining some of the things going on. But generally speaking, insurance rates for us, for churches, for nonprofits generally, are skyrocketing. We put a lot of effort way before COVID negotiating the best rate increase we could get. And our insurer, not necessarily everybody's insurer, but if you're on UCC Protect, we've been sharing with our insurance company all the planning that's going into re-entry and so on. And the insurance companies have not identified any kind of incremental requirements there. They're trying to figure all this out too. But in short, if we're doing what our health authorities and municipalities are asking and demonstrating some degree of diligence, that's all we can do. Next slide. So there we are, and I appreciate we've covered a lot of ground today. I don't know if there's some immediate questions. A lot of my answers are going to be try the spreadsheet.
Yeah,
But
I think if other folks are like me, Eric, their eyes are glazing over a bit
Yeah.
because it's so hard. The sort of working down period is so much more complicated. But it sounds like you've at least given us the broad bones of what they're trying to do, and when we go and play with the spreadsheet, we'll see the impact on our own particular situation. I don't know whether we need to get you into the weeds any more deeply than that or not.
we're here right now. And again, we could have been maybe a little more prescriptive if this had come out a few days earlier. But even the government doesn't have it quite right yet. So let's.
So a couple of questions about the 10% program. Is it over? How does it relate to what's going on now? Two or three people are asking that.
For your purposes, for the purposes of any of this, the 10%'s over.
So we're not going to get anything more from ADP beyond the stuff that we were entitled to in the spring.
Yeah, it was a 3-month program related to the payrolls in those 3 months. And even if we're collecting some cash, that is not a factor in any of the rest of this. That's just the way the program was structured.
Yeah.
So you wouldn't be claiming a 10% offset, even if you get some money this month on the 10%. You would not be including that. You shouldn't be including that in your calcs because you should have taken your full 10% entitlement off those early claims.
Yeah. So there's a church here that's got a student supply fill-in over the summer. Do they get wage subsidy for that person as well as their full-time minister?
I'm going to say probably input it into the spreadsheet and see what happens.
Mm-hmm.
I haven't personally played with how sensitive the spreadsheet is to additions and so on. But the whole idea of the program is to support either bringing people back to work or being able to hire. So my answer is input it into the spreadsheet and see what happens.
Presumably they're doing tax deductions and issuing a T4 to the student. So,
yeah, if
they're actually on payroll.
Yeah, if they're not, all bets are off.
Yeah. Okay. On the CEWS summary calculations sheet, it asks for the quote, subsidy rate used for active employees in the calculation of the total basic CEWS. What does that mean?
Well, on the form?
That's what it says.
Yeah.
I'm just reading what owner has said.
Oh, no, that's fine.
Thank you, owner.
Yeah. No, the short answer is, we just seen it and don't know for sure, but I'm assuming it's going to, I'm going to take it at face value and say, that it's arithmetic. So I think you're going to calculate the amount that you got in each period because you don't necessarily get the 10% because of the income tax bucket. Yeah. We've just seen this form. The government has issued no guidance on it, but I think it's going to be a matter of arithmetic.
Thank you. So a couple of people, one person in particular is talking about a substantial amount of lost income that they would have received for things like weddings and funerals and tenants that didn't have a lease. Is there any way of getting any of that back, or do we just say goodbye to it and use it to claim the other kinds of subsidies?
Well, there's no specific way. The short answer is that's what the wage subsidy is helping cover. Mm-hmm. Otherwise, the wage subsidy is found money, right?
Yeah. So we have 2 payroll accounts, haven't applied for the 10% subsidy for our part-time employees who are on the second account. Can we still apply for that?
The 10% subsidy is not based on payroll accounts. That's where you go take it. So you're not even applying. You can look at the 10% rules, and yes, you still have until, frankly, I think next February to go get that money. It can be an adjusting item as late as that. So if you haven't dipped into the income tax bucket to claim your 10% entitlement, yes, you can.
Okay, I think that's what this last question is about too. The amount I deducted for the 10% was $600 more than I've been credited for by ADP. But that's going to come back because that presumably has to do with the size of the income tax bucket each month, right?
That's what we think should be how it should all work out. Yes.
Yeah. We're planning on opening the church up and getting back to normal, close quote. Are we still eligible to claim CEWS?
Your opening or closing of the church is irrelevant to most of these programs. It's input it into the spreadsheet. It's what happens to your financials. So whatever your revenue dips were or weren't, whatever your tenants, if you any of your claims here, the program is intended to help folks reopen as well. So yes, you can claim, input your data into the spreadsheet. Even when you reopen in September, I suspect your September revenue may or may not be what it was a year ago. So input it into the spreadsheet and see what you're entitled to.
Okay. Here's a question that we've had, I think a previous time, but I'll ask again. If we receive restorative care payments for someone on a short-term disability, should we reduce the amount treated as pay for that person? In theory, we're paying them at their full salary and then we're reimbursed under the UCC coverage.
Yes, yeah, we've covered that in previous sessions, and of course, no one would necessarily know that. We've taken the position that you shouldn't be getting a windfall from your insurance. Restorative care is basically an insurance payment. So we have offered the view that the right thing to do would be to subtract the restorative care program and not basically be taking a handout for the government from that.
Thanks. Our My Business account shows a reconciliation for us. We owe them $1,000 and 15. Should we delay payment?
There's certainly, I think that was Dawn. You should check to see what it is. And certainly the government has extended deadlines. This isn't something that I paid any close attention to. Generally, I would pay it just to be rid of it. But the first thing to do is understand what it is. You can send me an email and we can look at it in more detail if you want.
Good, thanks. We got a large grant for our Food to the Homeless program. We can only use it for that program as a designated donation, but it'll end up in our donations for the month. Unless we qualify for under the deeming rule, I think this hurts our CEWS application for the month. Is that true?
Well, this gets into the definition of revenue. So folks that have had specific, for example, COVID programs, and this sounds like it might be one, the question is whether you could choose to consider that extraordinary income. If it's not part of your regular operating, if it isn't something that you would see on an annual basis, you would need to look at the definition of eligible revenue and consider whether there's a case for excluding it. I would consider excluding it, but you would need to look at the details a little bit. Clyde, any comment on that?
No, I would exclude it on that one.
Okay, there.
Thank you. Last question, and then I think we should go to the last few slides. We're being hit with a 40% increase in our insurance premium, trying to figure out how to cut costs. Do we have to insure our stained glass windows?
Well, that's a larger question, but
it is. That's why I saved it for last.
Yeah, the insurance concept is replacement value. There is potential to insure to a lesser amount, and I wouldn't exclude stained glass windows because that might be an odd thing to explain to your membership if something actually did happen.
I bet it wouldn't make a lot of difference to the premium anyway.
Yeah, well, that's the other thing. There are some, there are limited ways to try to reduce the premium, but most of them aren't very good because you could, for example, go to a stated amount and say we would never rebuild this $5 million building. We would only rebuild a $2 million building. But the problem is that it also impacts smaller claims. So you get into what's called co-insurance. Mm. So the short answer would be, I don't think it would change much.
There you go. And Rose is acknowledging they just had vandalism on their 100-year-old stained glass. They're very appreciative for the insurance because it helped fix it up. I am going to move us along because it's the bottom of the hour. We've been at this for 90 minutes already, and people are starting to leave. So
yeah, oh, no problem. I thought we might be a little longer tonight, but again, so just very quickly, this is the whole CRA help desk thing. I think most of the folks on this call are already there, but if you're not, and I'm saying this to my regional colleagues and so on, for the folks that have been afraid or have got hung up on some technical detail, maybe we can help a little bit, and in some cases, you're just going to have to work your way through the bureaucracy. Next slide. And we're almost done, folks. So this is a repeat slide, but again, so much happening at once and changing. Now, I wrote that about 3 months ago, and I haven't updated it because it's still true. I mean, look at what happened yesterday. So there will be some issues around the 10%. The government's already come to us with this new form that they're going to ask us for. A little later on, they're going to ask us to put the wage subsidy amounts, the Qs, what I call the 75%, on every T4. No payroll provider in the country has any idea how they're going to do that yet,
Right.
or whether it will still be a requirement 2 months from now. So there's just a bunch of weird stuff that will need to get figured out, and we ask your patience, and also just don't stress out over it, because there's it could all change again tomorrow. It just is what it is. The most important thing is to keep records of any assumption you've made, any interpretation you've made, and around eligibility, your definition of revenue, and so on. And that's just, there will be more bureaucratic requirements in the months ahead as folks shift from shoveling the money out to whatever degree of safeguards folks are going to put in, around audits and stuff. Next slide. I'm almost done, folks, honest. This should be links, I think, to various email addresses and so on. Let's see if it is. No, maybe one more. Okay, so what you need to do, okay, first of all, get online. I've beaten that to death. The 10%, we should be more or less done. And then for this go forward period, you should be measuring every single person out there should be measuring their revenue on these month over month comparisons, because you'll be eligible for something. The question is whether it's worth pursuing, and you'll make that decision yourself. Anyway, next slide, please. Yeah, so again, I sense that I'm preaching to folks who already know this, so enough said about CRA Help, other than to thank you, Clyde, Carla, and Rose, who just have done a great job of what I'm going to say is hand-holding and advising folks through this. I'm hoping that some of you will start reinstating your assessments and getting your M&S in. Some of you have already started reinstating your loan payments. And at this stage, we're hearing from a lot of folks that with the various grants and subsidies, and with congregations stepping up, that things aren't as dire as we feared they might be in March. But we're still worried more about the next, we're worried about October, November. We're still wondering what what the new normal and what the transition looks like. So there are some web links and, that we update periodically. And next slide might be my closing slide.
I think it is, yes.
Where again, I brought Jennifer Henry's message back because I just read it about once a week to remind myself that none of us signed up for this, and yet we're finding ways to share information and get this done, and we will get through this. Mm-hmm. So. And yet we recognize that all of us know someone who maybe didn't. So I just think this is a wonderful little closing prayer, and I just want to thank everybody out there for what you're doing for your church, your community, and of course Clyde and Steve and everybody. Much appreciated.
Sure. And thank you, Eric, for taking time out of an August evening to spend with us, and all the time you put into researching this too. What a difference it makes to us to have somebody speak to CRA on our behalf, so that we don't all have to be thumbing the phone and trying to find this information ourselves. We will, of course, be back online if there's new things to report. It won't be next week, but if things change and there's new information, we'll give you some notice through all the normal channels to us back together again. we're committed to trying to walk through this all together as we learn more about these things. So I won't say goodbye forever, but we'll certainly say goodbye for tonight, and I hope you'll join us the next time if you're able to. Before you go, we're also looking at the possibility of doing some more of the congregational programming webinars. We did a whole series in the spring, as many of you know, about how to cope with the pandemic. Things are changing. Lots of us are starting to reopen churches, looking for topics, and I'm looking for leaders, looking for suggestions from our constituency, and certainly don't want to duplicate anything that's happening on a regional level. But if you've got suggestions of either topics that you would find really helpful or leaders that you think we could all learn from, drop me a line either to my email or just go to United in Learning and click the Contact Us button and I'll pick it up. Love to get your suggestions. In the meantime, we're going to say goodnight here. Go and enjoy the rest of the August evening. Have a look at those meteors and enjoy the rest of your summer. And no doubt we'll connect again after Labor Day. Eric and Clyde, I'm going to take you into that breakout room again so that we can just debrief a bit, and we'll say goodbye to everyone else. Good night.
Thanks, everybody.
Good night. Thank you.